Hey traders, and welcome to our first new strategy, which is not really new. It's exactly the same entry reason as the 50 EMAP. There's just a variation to the stop loss, and this variation performed wildly better on the pound Aussie specifically, and may perform really well on other pairs as well. As of this moment, I've only tested this on the pound Aussie. So let's go ahead and dive right into this variation. Again, the rules for entry are going to be exactly the same as the prior 50 EMAP strategy that we looked at. The only difference is we have a different stop loss variation that we're going to be looking at today. So we're not going to go over the rules for the strategy because you should already know the rules. And with everything you know right now about entry, stop losses, targets, a 50 EMAP strategy, about building strategies altogether, this is going to be a very short video and you should comprehend this really quickly. But essentially, this is what these stop loss rules are going to be. Our stop loss itself is actually going to go below and above the high of the entry candle and the low of the entry candle. It's going to go below the low of the entry candle, what I'm drawing out here. Let's imagine is the entry candle, right? We enter on this candle for the 50 EMAP strategy. Our stop loss, if we're in a buy trade, is going to go below the low by a certain amount of pips. We're going to identify that amount of pips with the equation I have down here. And if we're going short, the exact opposite, our stop loss would be above the high of our entry candle. Same exact entry reason as the 50 EMAP, but our stop loss is at this point, using this variation, going to be above the high of the candle for bearish trades. And this is how. If the ATR itself is below 20, then we're just going to use the value of the ATR above or below our entry candle. This will be a lot easier if I just show you on a chart. Let's go ahead and take a look at it. Screenshot this if you would like to, or write it down with a pen and paper so you can have it beside you. Essentially, this is the part you're going to need because this is the formula that we are going to be using for stop losses today. So screenshot it if you'd like to, but let's go ahead and look at an actual chart and discuss our first way, which is if the ATR is below 20, we're using the value of the ATR as a stop loss. So I'm going to scroll over here to our very latest trade on the pound Aussie. As you can see, this was a 50 EMAP trade. In terms of the entry, we pushed above the 50 EMA, creating new higher highs. We pulled back by 2 candles and got a swing low engulfing candle right here with our green engulfing candle. I'm just going to delete this now to get it out of our way, but our entry would go at the close of that candle, assuming that's how you decided to enter the trade. Using this way of stop losses, let's consider that the ATR at this exact candle was 14. Now, I know it's not 14 right now, and I know that that doesn't even look like 14, so let's redraw 14. Let's assume that it's 14. If that was the case, all we're doing here and all our stop loss rules say is that we want 14 pips below our entry candle. So this was our entry candle right here, this green one. All we're going to be doing is pulling down to that green candle low, which gives us 45 pips. If we had a 14 pip ATR, we would just be adding 14 pips to that 45 pips down to our low, which would be 59 pips. So we'd have a stop loss of right at 59. We would then have a target at 59 as well. And that's what the trade setup looks like. And I know what you're thinking. Well, Steven, this looks like it lost. Why'd you have a green line right there? And the reason is because the ATR of that candle was not 14. It was in the 40s. But we're going to go over to our stop loss rules. That's just the way you would set your stop loss if the ATR, again, was below 20. So anything below 20, we're just using the value of the ATR below the entry candle for bullish trades and above the entry candle for bearish trades. Hopefully that makes sense. We're going to go through a few examples of this to ensure that you understand it completely, but let's move on to our second way of taking stop losses. That is going to be if the ATR is between 21 and 50, then we're going to use 30 pips below or above the entry candle for our stop loss. So let's move back over to the candle that we just looked at, and it actually does have an ATR between 21 and 50. If we look at the ATR while I hover over this entry candle, it's actually 47 pips. So with that being the case, what will we do? If we have this candle, it closes, our 50 EMAP is on, and we're using the pound Aussie and this variation of a stop loss with a 47 pip ATR, we would be doing what? we would be placing a stop loss 30 pips under the low of that candle because we're in a bullish trade. So with that being the case, we have 45 plus 30, which is going to bring us down to around a 75 pip stop loss, which keeps us from being stopped out. And a 75 pip target, if we're using a 1-to-1, is going to look something like that. So that's how that trade setup would be, and how the variable stop loss that we're talking about is used when the ATR is between 21 and 50. Now, what if the ATR is between 51 and 100? Then we're going to use a 50 pip stop below the low of the candle if we're in a bullish trade, or above the high if we're in a bearish trade. This is probably all making really easy sense, but if you're confused at all, just rewatch this part of the video one more time, because it is a very simple process. It just seems like a lot of numbers to remember, but if you'll write it down and put it beside your desk, it'll be super simple every single day. So between 51 and 100 on our ATR indicator right up here means we are going to be using a 50 pip stop loss number below or above the swing high, or excuse me, the high of the candle or the low of the candle. I don't know why I was trying to write all that out, but if that was the case here, let's say this is our entry candle, just to keep things simple, and let's pretend that ATR was 55. What would we do at that point? Well, we would have a stop loss 50 pips below the low of our entry candle, because anything between 51 and 100, we're going to be using 50 pips as our stop loss. So in that case, we would pull down to the low of our candle at 45, add 50. That would be 95. And that would be our stop loss, along with a 1-to-1 target would look something like that. Now, as I said, I'm going to go through and actually do 10 examples with you. Although it should be very easy to comprehend, I want to ensure that you see enough examples for you to be able to comprehend it very, very easily and spot it very, very easily. Again, not a big deal if you need to screenshot this or put it beside your desk for now. I know it's a lot of numbers to remember, but let's go back throughout the last 10 trades here on the Pound Aussie and actually do what we're talking about. Actually use this variable way of setting stop losses. So our first trade is right here, and it is bearish. This is our entry, and as you can see, if you're familiar / if you remember from our 50 EMAP strategy, we have a new swing low here, a pullback to a 1, 2, 3 engulfing candle. After that, using our variable stop loss rules, what do we need to do? We need to identify the ATR of our entry candle. What is the ATR of our entry candle? Look in our top left, we have 47 pips. With that being the case, what is our stop loss? Well, if we're between 21 and 50, we're always using 30 pips below or above our entry candle for the stop. So in this case, it's a bearish trade. We'd go above the high of our entry candle. We have 17 pips to that high, plus 30 would be 47. So we have a 47 pip stop loss, setting ourselves up with about a 1-to-1 reward to risk ratio. As you can see, winning trade. Let's move on to our next trade. Here we have another 50 EMA winning trade. We get up here to a new high. We have a pullback of a few candles, and here is our 1, 2, 3 engulfing candle right here. What is our next step is to identify the ATR of our entry candle. You can see up in our top left of our screen, it's about 46 pips. So again, what would we be using here? We'd be using 30 pips below the low of our entry candle. Going down to the low, we have 30 plus 30. It's going to be right at 60 pips for our stop loss. And as you can see, we easily hit a 1-to-1 right over here with that being the case. We'll move on now to another short example, another sell trade here. We have price pushing down, giving us a 50 EMAP entry with a few candles of a pullback and a swing high engulfing candle for this example. Our next steps are to identify the ATR of our entry candle, which is 51. Okay, so now we're changing, right? Because remember, anything between 51 and 100 is going to equal a 50 pip. I did 5, oops. 50 pips above or below our entry candle. So in this case, what is it? It's going to be 50 pips above our entry candle. Going up to the high of our entry candle, we have 25 pips plus 50. It's going to give me 75 pips on this stop loss. And if we're looking for a 1-to-1, as you can see, we easily hit targets here for 75 pips in this area. We'll go ahead and move on now to another trade, which is right here, another example of a sell trade. We have our 50 EMAP entry with this swing high engulfing candle. We then need to do what? We need to identify the ATR of our entry candle, which is 44 pips. We have 44 pips. What does that mean our stop loss is going to be above our entry candle? 30 pips, right? Because anything between 21 and 50 is a 30 pip above or below the entry candle stop loss. 63 plus 30 is going to give me something like 93 pips on that stop loss. And with a 1-to-1 reward risk ratio, as you can see, hit targets very easily here. I actually think that's probably enough. So that's probably enough examples, guys. You've had a few there. Every one of these is exactly like that. Take a screenshot of our little table here. Anything, I'll go over it one more time with you. Every entry, or every stop loss, excuse me, is going to be above and below the high and low of the entry candle. So that's different from the regular 50 EMAP, but should not be too hard to comprehend. If the ATR is below 20, then we're using the value of the ATR. So anything between 19 or between 1 and 19, we're just using whatever that value is below or above the entry candle. If the ATR is between 21 and 50, then we're using 30 pips below or above the entry candle. If the ATR is between 51 and 100, then we're using 50 pips below or above the entry candle. And if the ATR is above 100 pips, then we're just using 100 pips above or below the entry candle. Now, as I said, this just gave me dramatically better results with the Pound Aussie, although that's the only pair I've personally tested this with so far. Feel free to test this with any other pairs that you would like to. It gave a 63% chance out of the latest 100 trades. As you can see, looking left, these are our latest 100 trades. I think we go back to our next black line. Let me see if I can find it. So the 100 trades actually took me back to 12/7 of 2018, and that's how long it took me to get that 100 trades in. And again, out of our latest 100 trades as of 12/7/2021, we have a 63% chance to win with a 1-to-1 reward risk ratio. Again, this variable stop can be used on any pair that you would like to test it on to see if it improves the win rate in the same way that it did here on the Pound Aussie. With that being said, I hope this video was helpful. Hopefully it gives you a different way, a different variation to try to use with any pairs that didn't work with the regular way of stops on the 50 EMAP. And the reason I didn't put this in with the 50 EMAP is because I don't want to confuse anyone at the beginning. At this point, you should already have a full trading plan built up, and you should already have a lot of testing done with the 50 EMAP. So it should be very easy for you to take this variation of a stop loss and apply it to those testing results to see if this works better on certain pairs. With that said, I'm gonna let you guys go. Email me and let me know if this variation helps you out in your trading, and I'll talk to you guys in the next video. See you soon.